If you trade penny stocks or the early runners in the pre-market hours, this video is for you. A couple years ago, I developed a scanner that's based off the SMA or simple moving average with a volume overlay and a couple other defining features which I'll showcase today. I confirm it with my DMA or displaced moving average chart, which is a visual display which helps confirm and show further bias into the breakout cycle. Now let's get right into it. As you can see, we're on Thinkorswim right now and we're in the scan section, and let's load up this personal study, or this personal scanner, unusual volume. And to start off, we'll see I have my first criteria is volume, minimum of 100,000, no maximum. That's the least important in my opinion. That's just to avoid the bottom feeders, the ones that are picking up on other indicators of the scanner, but obviously are dead and not getting much trades or volume. We want to stay away from those. And to move on, last, or otherwise known as last price, last traded price, minimum of 10 cents, but much more important, maximum of 10. And you could even go lower than that. I would advise 5, or if you want, you could even go lower. And that is really just to make sure we're staying in the small to penny stocks, small caps to penny stocks. We really don't want to be picking up any mid caps or larger, because obviously, as you go up in market cap, usually the volatility decreases as well. So we do not want that. To continue, we go to the shares. This is the float. This is very, very, very important in my opinion. Obviously, no minimum and a maximum of 25 million. We do want a very low float stock. We want the volatility. If we're looking for penny stocks, those pre-market runners, they are not going to run if they have a high float, if it takes a lot of volume to move them. So this is a big criteria, and 25 million is very low. So if it's picking up on the scanner, it's going to move. So that is pretty big in my opinion. And to move on, obviously the study, we see it's based off the SMA, simple moving average. We have the 50 and the 200, and we'll jump into the study really quick. It's very short, only 10 lines as you can see, and SMA 50 close SMA 200. But this is the most important in my opinion, the volume condition. And as you can see, relative volume standard deviation 50, and this is, as I said, it's not a long chart. You could probably just write this in a couple minutes, but I'll leave it in the description or leave a link either way. And yeah, you could add this or tweak it a little bit, but yeah, this worked for me when I was day trading and scalping penny stocks in the morning. But let's scan it real quick. Let's see what it picked up for today. As you can see, it's aftermarket. This is military time, but this is around 7 p.m. Mountain Time, so we are aftermarket close. And as you can see, from top to bottom, did pretty good. And start with the first one, ZOOZ. Go to our charts. And as you can see, our DMA, 250 DMA, or displaced moving average, or that study is already plotted. Makes it easy. And remember, our Mountain Time, so 7:30 is my market open. So this is market open, give or take right here. And as you can see, we have that 50 DMA cross right over the 200. Let me zoom back out a little bit. As you can see, clear crossover. That was a trigger to the scanner, and obviously it met the other criteria under the 25 million float, the last traded, and obviously the volume. So this is a clear example to me. So obviously the market open. I don't know if there's news or anything. I'm going to assume so, but obviously this actually picked it up the previous day. Yes, this was July 21st, and the breakout happened July 22nd, so excuse me. Yes, the indicator picked up the crossover the day before. So I don't know if that was news, or there was a filing, or some economic event, or something else, some sector-wide event, but yeah, definitely met the criteria, and this is a pretty golden example in my opinion. But we'll move on, we'll show you one more. Go back to our scanner, go to IVF, nice 35% gain, 52 million volume. It's a very good amount, especially it's trading at a higher price than the first one. It's getting almost double the volume. So we'll go to IVF. And keep in mind, we are on the 1 minute time frame. And for this one, we had the crossover happen a little sooner than the previous one. The previous one happened the day before in the pre-market hours. This one happened July 22nd. So zoom in a little bit. As you could see, we had the 50 DMA crossover, and happened around midnight of the 21st going into the 22nd. Crossed over. As you could see, clear crossover. Next day had that breakout event. Again, met the criteria, under $10, over 100,000 volume, and we had that crossover, as well as under 25 million float. So this was a banger on the screener again, and obviously, as you could see, went up to 5.3, closed much lower. So that 35% is pretty pretty conservative for how good of a day I had. So as you could see, we'll go down to one of the losers just to give an example of when it didn't work, because everyone loves to show their winners, not their losers. BSPK. Let's see what this one is. BSPK. And this is actually a great example. This is OTC, as you can see. I'll show you in another video or a follow-up, but you definitely do want to filter out the OTC, and otherwise, I believe it's just, let me go back to the scanner. I believe, yeah. So the more you want to filter out the warrants and the OTCs. So obviously you can input that into the study, but yeah, overall this was just a quick overview of this scanner / chart visual display correlation. It's of the simple moving average and the displaced moving average, but this was just supposed to be a quick video just to highlight my old penny stock days, just to give you some insight and trying to help out anyone that's still doing that, still trying to get the pre-market runners. And yeah, I wish you the best of luck, and please like and subscribe, and more videos will be coming soon. Thank you so much.